Hello and welcome to this Mining Journal Uranium panel. My name is Chris Cann from Mining Journal, and with me I have a collection of uranium-focused companies, analysts and investors. Today we're looking to cover off the resurgence in the long-suffering uranium price, the development pipeline, the potential for corporate activity in this space, and uranium's position in the hottest of all topics right now, the energy transition. Taking part in this discussion are Fission Uranium President and CEO Ross McElroy, Purepoint Uranium President and CEO Chris Frostad, Sprott CEO John Ciampaglia, and Edison Investment Research Director of Mining, Charles Gibson. Welcome, everyone. The price growth we've seen over the past 12 months has been long awaited, probably to say the least, for uranium companies joining us today. I'd like to look at what the key drivers have been and what levels you'd be expecting probably in the near term, where things might settle out. Ross, I might get you to lead us off if we'd look at what you'd consider if you need to reconsider the pricing you're using for the feasibility work at PLS at the moment.
Sure. Well, we used $50 uranium in our pre-feasibility. That was back, we completed that report in 2019. So, that's more or less where the uranium price sits right now. Spot uranium is slightly lower. I think term is somewhat slightly north of $50. So, we're pretty much on target with the number we used in the pre-feasibility study. I expect that the price is going higher. I think most of us in this business expect that we're in the beginning of a bull. So we'll see. We're in the midst of doing a feasibility study, and of course we haven't chosen the price target to be using at that, but that's still over a year away before we're wrapping that up. So we have a little bit of time, but I'm quite comfortable knowing that the economics and that we determined in the pre-feasibility basically are current with today's prices.
Okay. Charlie, from an Edison perspective, just generally, what price forecast do you use when you're doing your research at the moment? What's driving that?
Well, I think probably we're using, around about the sort of $50 level again. I think the significant thing now, though, is the price movement we've seen over the course of the last few months. And, when uranium moves, it can move very, very spectacularly. You can probably remember prices over $100, certainly in the spot market. But I think there are several things that are interesting that's happened in the price in the last couple of months. We've had the spot price move, but we've also had the contract price move as well. There's also, really uranium has suffered from a dead decade. Ever since Fukushima, what was that, 10 years ago, 2011? I mean, it has almost been off investors' radar screens generally, except for the very, very focused and the very, very specific. But suddenly, and really, it's not just a case that the uranium price has been flat. It's been flat and drifting lower, down to levels where most of the industry must have been making a loss on a going concern basis. And now we suddenly had this pop, and that actually makes uranium, if you look at it over the course since 1st of January 2020, it's now the third best performing metal and mineral out of 16. So in top position at the moment is Australian coking coal. I don't think it's going to stay there. That's a different question. We've got tin, which has done fantastically well and been consistently strong, but all of a sudden uranium has come from nowhere, and really nowhere, and suddenly it's the third best performing all of those metals and minerals. So I think these are very, very significant movements, and I think people had different opinions, but I think an awful lot of what has catalyzed this has been the COP26 summit in Glasgow, and suddenly we've all had to refocus our thoughts and our analysis on not what's going to happen in the next 6 months or the next 12 months, but what's going to happen in the next 10 years, what's going to happen in the next 20 years. And, there are all of these doomsday scenarios out there. There's all of this carbon dioxide, which needs not to be emitted. And with the best will in the world, it's very, very difficult how the world is going to see how the world is going to achieve that. Well, there are several ways. The population could fall. The population could get a lot less wealthy than it is now. Or, the third way would probably be a big piece of the jigsaw, in my opinion, being taken up by the nuclear industry. And I think it's that refocusing which has really caused the market to move recently. We know the market is in deficit, and quite a significant deficit. It has been in deficit for some time, so I don't think that's what's driving it. But it's the impression of what's going to happen with that deficit over the course of the next 4 or 5 years, and also to some extent what's happening with stockpiles. Uranium is one of those markets which has been beset by stockpiles. It has a long pipeline, uranium. All the way from the miners through to the utilities. You go through the converters, you go through the enrichers. They all have their stockpiles, and at various points in time, particularly after Fukushima, we know all those stockpiles are ramped up, and we know that the market has been working its way through them. Over the last 5, 6, 7, maybe 10 years. The fact that the price has moved is also indicative of the fact that probably those stockpiles have been drawn down now to levels where companies, agencies, governments, whatever they are, miners, are happy with those stockpiles, but certainly don't want to see them any lower. And therefore, suddenly, you're having to see the market react, if you like, to the fact that we're not seeing stockpiles drawn down anymore. I think that's why the spot price has gone up. We've also got a speculative element in the market, and I'm going to let Sprott talk to that, if I may. But 10, 20, certainly 30 years ago, that element just didn't exist. It was all about the miners, it was all about the enrichers, and it was all about the utilities. But now there is a big element of speculation, or the big possibility of speculation. That's also going to have an effect as well. So it's all of these things coming together, if you like, all of these factors and forces which are affecting the uranium market at the moment. You asked me a direct question, what are we using? Yeah, I think we're using $50 at the moment, but when uranium moves, it can move far and it can move fast. We'll stick with that for the moment, but certainly for the short term, I wouldn't be surprised to see it, certainly the spot price a good way north of that.
Okay, Chris, I noticed you nodding along, particularly when Charlie was talking about some of the longer-term forecasts. Hook Lake is potentially a longer-term consideration for the market. You're probably looking a little bit further out than current spot prices for some of your feasibility work. When you start getting into the teeth of that, how do some of the points that Charlie's raising, and maybe we'll leave the climate consideration one for a bit later because that's probably a bigger piece, but how do you view some of the other drivers of the market, and what kind of pricing are you happy with? Are you looking around $50 or are you going north of that?
Well, I think $50 is probably a good longer term view of it, but I think in the near term, we're really not sure what we're looking at. To Charlie's previous point, over the last 10 years, we've seen a lot of production taken off the market. We've seen a lot of mines shut down or production reduced. And I think over the last 3 or 4 years, the world's been producing about 20 to 30% less uranium than it's been using. So certainly those stockpiles that Charlie speaks of have been coming down significantly. And the point to be made is that all of these these reserves that are sitting in terms of uranium can't be turned on overnight. I think MacArthur, which is Cameco's big mine that was shut down, will take a year or two to ramp up, and others would be the same. Certainly Ross's project and a number of other projects in northern Saskatchewan, have had a lot of work done over the last while, but they're all ready to start going to construction. So I think in the near term, we really don't know what it's going to jump to. Like we saw back in 2007, it really overshot the necessary price for a while and then came back down. And I wouldn't be surprised if we see that happen in uraniums as well. Is we'll see or in the near term we'll see it do quite a big jump maybe in the next little while, and then probably come back. I mean, $50 is probably not a bad number for it to settle out ultimately.
John, for those who aren't aware, Sprott has launched what I understand is the only uranium ETF in the world, in the market at the moment. Charlie alluded to the fact that you'll have some obvious views, therefore, on spot pricing at the moment. But if I could just get you to start off talking about the actual drivers, what led you to launch the ETF, and then move on to that spot pricing forecasting kind of piece as well.
Sure. Yeah, I'd be happy to cover that. So, the Sprott Fission Uranium Trust has been alive and kicking since July 19th. It feels a lot longer than that because of the impact it's had in the marketplace in a very short time has well exceeded our expectations. We've been interested in uranium for a number of years. We saw the market as being severely dislocated back in 2017, 2018. And at that time, we tried to figure out how to enter the space. We thought about structuring a new fund. We have 4 other physical commodity funds that trade on exchanges. And so we have a lot of experience with those funds, and took a hard look at the idea of, can we launch a new fund back then? And we decided it was just too difficult given the market conditions were so horrible at that time, and investor interest was basically zero. So we quickly pivoted to the idea of acquiring something that we knew very well, Uranium Participation Corp. Sprott had been involved with its creation way back in 2005. And at that point, we started the discussions with the UPC board. It was, believe it or not, about 3 years ago, right around now. I met the chairman of UPC right before Christmas. That started the discussions. They took longer than we were hoping they would, but in the end, I think the proposal we put to the board was very well received. It was very well thought out. It really encapsulated a lot of the experience we have running these commodity funds for investors around the world. And we just thought that the price was artificially low. It was obviously the market was very broken, living off of secondary supply. But we, those kinds of situations have finite lives. And at some point, with all the shut-in production that we saw, we felt that the market was going to start to move back to some level of equilibrium. I know the guests have talked about $50 uranium. I think we're much more bullish than that. And the reason I'm saying that is because we see a very tight spot market. It doesn't take much to push the price to $50. I also don't feel $50 is really much of an incentive price for many producers. So we don't see any behavior changing at $50. So I don't think $50 is a magical number where the market gets to recalibrate. We've purchased about 20 million pounds of uranium in the last few months. It's, as I said earlier, it's well exceeded our expectation. And as I said, the market is very small and it's very tight, and it doesn't take a lot of dollars to move it around in our experience. So we think that longer term, and I don't have any magic ball, crystal ball here, but the reality is the price needs to get to an incentive price to basically bring production back online. And, I can't tell you what that number is, but it's not $50. And I think the market eventually needs to get there because uranium is a critical mineral. I think the underinvestment in the sector the last 10 years has more impact than I think a lot of participants understand. The time to bring these deposits back online is real. It's material. And obviously, any new deposit can take many, many years to come back to market. So we think it's a critical mineral that's now just getting the attention of investors. And our experience has been in the last few months that the types of investors we're speaking to have moved from more commodity-oriented funds to now more generalist funds. I think they're getting very interested in uranium as an investment category. Given what was mentioned earlier about COP26, there's growing recognition by governments in many countries that nuclear has to be part of the decarbonization strategy, and that the sector has been poorly, it's been underinvested for so many years because of Fukushima. So we think it's just like the perfect storm in terms of resetting the marketplace, and we think it will take a number of years, but it's well underway.
John, you mentioned the word dislocated describing the uranium market. Do you feel that process of making it relocated, if that's a term, is a 2 or 3 year process? And what role do you think an ETF, in terms of bringing some transparency to a market that is usually mostly essentially contract based, will have in terms of rebalancing that market?
Yeah, I mean, I think the reality is the uranium market, the market cap of all the uranium producers and explorers and developers, it is tiny compared to many other commodity markets that we deal in. And that's just a function of it being ignored and going through a massive bear market for basically 9 of the last 10 years. So what we've seen is that when investors get interested in a category, it does not take a lot of capital to kind of slosh over and make a big impact. And we're just starting to see this. Obviously, in the last 12 months, We've seen interest come back into uranium equities. Companies have finally been able to raise money again. We've raised over $1 billion in the uranium trust in essentially 3 months or so. So there is a lot of money out there looking for homes for new ideas. And I think what's interesting to us is that people are starting to take a different view of uranium. Yes, it will always be polarizing for many people. But when you have big investors thinking of it in an ESG framework, I think that's really interesting. What we've noticed that people are putting it into all kinds of buckets, whether it's an ESG bucket, whether it's a value bucket, whether it's a commodity, clean tech, small cap, global equity. So that's really interesting to us that we've been able to talk to people about uranium and uranium equities in a lot of different segments. So that, I think, creates a lot of appeal and potentially broadens the audience.
Chris, John mentioned the incentive price in the first part of that response. Interested from your perspective as a junior equity in the uranium space, and also Ross, I'd like to come to you as well on this. What's it been like in the former price environment trying to move projects forward, and what have you seen around among your peers in terms of the ability to actually progress anything to a point where companies can start to meet the demand that's being created by a rising price? What's that experience been like for you?
Well, I mean, for us in particular, it's been tough. It's been tough for a lot of the explorers in the uranium space. In northern Saskatchewan, we've been able to keep some relevance, mainly because that is such a dynamic place to be looking for uranium, because of the grades and what we've seen up there in past years. So we can always keep a bit of a spotlight on the exploration side of it. For us, we've got about a dozen projects up there, and we put most of those under a sheet for the last 10 years because the money wasn't really there to advance them, and the market really didn't care if we advanced them. So, but there has been money for those projects of merit. We've seen, we have one project that we operate for Cameco and Orano. We know that their exploration budgets have for the most part, been maintained over the last 5-10 years. Because of course they've got a far longer outlook than we do in general. They're looking for their next source of feed for mills that they already have going on. So in that respect, I think for projects of merit, there has been money available. There has been capital available for us to advance those, but we've had to be very careful with the capital that we have available to us. Also, and I know Ross will speak to this further, but I mean, in the last 10 years, we've seen 3 fairly huge projects advanced in the last 10 years. I think Ross's project and 2 others were discovered 10 years ago, and in that time frame, we've seen them come to resource estimates and PEAs and feasibilities. But I can let Ross speak to that further. So it's I think like I say, for projects of size and merit, there has been capital available, but for the most part, it's been very slow outside of that, for sure.
Ross, obviously, Chris is referencing PLS there with Fission and discovery through to now in the development stages, at least the planning for it. Would you have said that you'd have been a lot further down the track in a more robust pricing environment? How much has it held you back, I suppose, is the question.
Yeah, I mean, it certainly has held us back. There's no question. We were fortunate, with the discovery that we made. It was back in the fall of 2011, which was, very coincidental with the real long-term slowdown in the market. But this is the effect that a really good discovery will get you. So that capital still flowed into the project, into the company. We were able to advance the project okay. On the exploration front, we definitely dialed things back because there was, we were, the way the market was, you were being punished rather than incentivized to explore, which is, really, really unfortunate. If people, understood the timelines involved between discovery, making a mine, it's a long time, and you don't make a discovery without exploration. So it's truly it's a vicious cycle that you can get into, and it has been difficult. but I would say that where it's really slowed down is once we completed the pre-feasibility study in 2019, we were very low on capital. There wasn't anything out there to raise money, further money. So to be able to jump right into a feasibility study, which is probably something we would have liked to have done in an ideal world, you just, move right from the pre-feas directly into the feasibility. I think we probably lost about a year and a half. So, you can see it certainly has had an effect, and any exploration on the PLS project, which is an extremely, good project with great exploration potential, was really, really dialed down. And again, as I say, it's such a long timeline between discovery, to make a discovery and then to get it up to a mine. So it's, it's been tough, but I think what we're really seeing now is obviously with the vast improvement in the price of the commodity, there's a lot more incentivization to explore now, and companies can raise money, and it feels like a much, much better environment that we're in now. And I think that we're just at the beginning of a long bull cycle. So.
Charlie, I suppose from the commentary we're hearing, we are obviously entering in we have entered a very strong period for uranium. That's happened quite quickly, whereas we all know that mining projects take a long time to be developed. Would you say the supply challenge at the moment is simply a challenge, or is it a little bit more critical than that?
I mean, I suppose it depends on how you want to look at it, whether you want to look at it from a geopolitical point of view or a financial and returns point of view. We've alluded to it. So, in terms of COP26, in terms of the climate, in terms of meeting those targets, I think it's pretty critical. In terms of the finances and making the returns, getting projects financed and being developed, I think it's a challenge. One of the things I have noticed over the course of the last couple of months is, although the uranium price has jumped by whatever it is, 50%, quite a lot of equities haven't followed suit. Some have, but by no means all. So there's a lag factor, and quite often you see this with commodities and with derivative equities. The commodity moves and the equities take a little bit of time. Often it's in my opinion, it's the equities investors saying, we're not quite sure we believe this. We like the look of it, but we're not quite sure we believe it. We're just going to wait a little bit longer. We're going to wait another, I'm going to pick a number, 3-6 months. If it sticks, then we're interested. But we just want to make sure that this isn't the flash in the pan. So, I think that's going on at the moment. First of all, you've got to wake equity investors up, and you've got to wake them up also, I think, not just to the fantastic projects. And, we've been talking about the Athabasca Basin, West Athabasca Basin in particular. These are some of the best projects in the world. And, the fact we're talking about financing those in the last 10 years, and we're saying, yes, it can be done. But, anything that was sort of medium quality or just about all right, or, even slightly better than that, better than average, more than adequate, it was really, really tough to get those things financed. So, I mean, there will be a lag time getting investors interested. And once that happens, there will then be obviously that same lag time that you always get between financing something, getting it built, and then seeing the supply come online. The market's going to work as fast as the market does. In terms of investors, in terms of the returns they make, I think there's some fantastic opportunities here. In terms of hitting our climate targets in 2030, 2040, 2050, it's critical. And, if you want my honest opinion, I think it's going to be difficult to hit those targets unless something moves really fast. And with the best will in the world, investors aren't going to do that at the moment. Not that they don't want to, I don't think, but they need to feel a little bit more security in their investments before they do. So unless the governments start stepping up to the plate, I'm not quite sure how that's going to develop.
John, seeing you nodding along with most things Charlie's saying there, you're, as Sprott, not suggesting for a second that you haven't got a bigger picture in mind most of the time, but very much focused on that return side and the investments, and also see you agreeing vehemently with the supply shortage and the timing on things. Is that what's driving a lot of your decisions, that there's just nothing in the cupboards at the moment?
Yeah, I think one of the big questions we get asked a lot from institutional investors is this the true inflection point for the price of uranium? And I think that's a fair question to ask, given how many years it was in the doldrums. And people kind of sit there and watch it at $30 a pound and ask, well, if it's in such a deficit position, why is it still at 30? Why isn't it much higher? So I think a lot of institutions have asked us, do we think this is the true reflection, or is it another false start, or is it another flash and it's going to go away? I think the reality is the costs of everything around the world have gone up substantially in the last 2 years. I mean, just about everything in the commodity space, energy-related commodities have all gone up a lot. So, I think the world has taken notice of that, and uranium is obviously just one part of the picture here. I think people underestimate how long it takes for new supply to come on board. And also, what happens once the tier one assets come back online? What then? And I think there's a bigger lag effect there. So I think a lot of people are looking at uranium again because they see a very positive narrative coming from a number of governments. I think that gives them a lot of comfort that it's real this time. It is hard for governments to make very pro policy decisions around nuclear and uranium, given it is a polarizing topic for their constituencies. And I think when you see the Biden administration and the infrastructure bill lend support to the nuclear industry in terms of financial support and regulatory support and plant extensions and operating extensions, all those things give people comfort that it's shifting. The winds have shifted here, and governments are being much more supportive with policy. Because the reality is, as we all know, renewables has taken the lion's share of government subsidization and regulatory support over the last 10 years as they've built out the infrastructure for renewables. So we think the policy shifts are really important signals for investors to pick up on, and it's giving them comfort to come back into the category and make investments again for the first time in many years.
Charlie, I wanted to ask you about M&A. We'll start with Charlie on the M&A question. If this was the gold space and we saw this kind of price rise, as we have done in the fairly recent past, then you'd see most of the majors positioning themselves for M&A and to restock. Are we likely to see something similar in the uranium space? And are there already signs that's happening, or is it a different story?
I think the general pattern will probably be similar, but it takes a while for even the gold companies to move. And arguably, we've been in a gold bull market for the best part of 20 years. All right, had a bit of a hiatus for about 6 or 7 years, but from 2013 onwards. But I think if I look back at my time as a mining analyst, you went back 25 years. Everyone has always been talking the M&A story. And it does come in fits and starts. It is there, but it tends not to be when everyone thinks it's going to be. And it's certainly not an overarching thing it's not a constant thing that you see as prices go up. You see more and more M&A activity. You tend to see it move in, as I say, fits and starts, and you'll get nothing for, maybe 2 or 3 years. And then you'll suddenly get 2 or 3 deals will happen in the space of 6 months. Companies have got to be looking around. I mean, that is part of their job, in terms of replenishing reserves and resources. And that's what the majors are going to have to be doing. So it would be very surprising if they weren't looking at. But they aren't sort of the same sort of investors, and the same sort of investors are conservative in the same sort of way. So it takes a while, if you like, for the story and what's actually happening on the ground to feed through to action. And so, do I think that the majors are, we have seen 1 or 2 M&A deals, or certainly one I can think of off the top of my head, in the uranium space. But it's not going to happen, by and large. I think the pattern's going to be we're going to have to wait for 2 or 3 years out for everyone to be very comfortable with the situation. And then I think we're going to see the majors start moving.
Okay. Chris, you've already got you got one absolute major with Cameco, and you've also got Orano as well in there. As you mentioned before, you've got producers and large-scale uranium players in there at Hook Lake. What was the process with them being involved? And have you got any insights into how they're thinking and how they're approaching the M&A opportunities or needs in the current space that you're allowed to talk about?
Well, I think to the M&A space, I think it comes back to one of the earlier points about quantum. I mean, the uranium space is relatively small in comparison. I think there's probably about $250 billion worth of gold produced a year, and there's maybe $6 billion worth of uranium produced a year. So it makes for a very different dynamic. It's hard to compare where we're going to see M&A come about. With regards to our partners, Cameco and Orano, we work on a project close to Ross's project that we actually got involved with them about 10 years ago, 12 years ago. From an exploration standpoint, we were earning in on that project, and we're operating it for them at that time. Then thank goodness to Fission, they came up with a nearby discovery, and the whole place kind of lit up. So actually, Cameco and Orano had been working that area for a while, had not yet vectored in on the sources of uranium over there, and since then it's become one of their major projects. From an exploration standpoint. So they've been excellent partners to work with, because they have such deep technical capabilities in Saskatchewan and in northern Saskatchewan, and certainly from a financial standpoint, when it was very difficult for companies of our size to put the resources together to properly explore this stuff, they were certainly there with that as well. And I think many would attest to the fact that what we do is not a cheap process. There is a lot of money has to be spent, and I think I've calculated sometimes it's taken between $10 and $15 million just to come up with a discovery hole, let alone to turn it into a resource and ultimately a mine. So it is something that takes a fair amount of capital. Our partners it's been fortunate that we've been able to work on a project of this size and scale with the financial backing of our partners, but I think they're going to continue to be there and quite active in northern Saskatchewan from an exploration standpoint. I can say that a lot of their efforts too, again, because they are dealing in a much longer time horizon, a lot of their focus is always around in exploration where their mills are, right? So they're starting to try and figure out where they're going to get feed for some of these mills 5, 10, 15 years out. And that drives a lot of their exploration decisions as well. So they're certainly looking at it from the long haul.
Ross, similar question, but we keep hearing about how impressive PLS is and how few projects there are out there in the market of any standing, let alone standing such as PLS. Who's sniffing around down there that you can tell us about? Or how do you approach, what's your strategy when it comes to M&A? Is it something that you have to consider?
Sure, and just a comment a little in general about the M&A activity. I think it's inevitable. You're right. It's hard to pick when these things happen. They're rather sporadic when they do. But the M&A activity it's inevitable, and particularly in this business with such a few number of players. When I think about the big companies, the major companies, they don't explore as much as they used to. The majority of the big mining companies have eviscerated their exploration staff, and much smaller budgets, much smaller staff. So you're seeing the discoveries these days made by juniors. Fission's a good example. NextGen was an example as well. A junior making a discovery. Purepoint, the junior with a nice discovery on the same trend again. It's really it's kind of moved away. When I first started in the Athabasca Basin, it was really all about Cameco and the predecessor, Urano, which was Kojima at the time I worked for them. We're very, very few small companies. So I think that kind of dynamic has changed, and the really significant discoveries have been by the smaller groups. I think that, you see these sort of discoveries such as PLS, that I would think that, they're going to attract the attention of majors, other strategic partners wanting to get involved in the system. And, we certainly expect that M&A activity will increase, and particularly, you'd think that everybody would want to be taking assets like this when the price is low, and but it just doesn't quite work that way. There is an odd timing to M&As that happen and sort of when you sort of least expect it, which I think was a point that was made a little earlier too. So but we'll continue to have a lot of interest, I think, in our project in particular. So not an awful lot I would share at the moment specifically with regards to that, but I think that this is the sort of project that has a good chance. Our PLS project has a very, very good chance of seeing its way through the process and ultimately to become a producing asset. And I think it'll be one of several that we see in the southwest side of the basin in particular, which is an area that I know that Chris is focused on as well. There's going to be multiple operations in that area, so I would expect M&A activity, to at some point start playing an important role in the activities that we're seeing in the Athabasca Basin, and in particular in the southwest side. You're really going to see the next generation of mine development, I think, start migrating over into that new emerging area. And having Cameco already with a toehold in the area, I think, is important. With Rana with a almost more than a toehold, they've actually have a history of exploration and development in that area. We have a strategic partner with CGN, a Chinese utility, involved there. It will start garnering more and more attention, and I think M&A activity will become a major part of what happens going forward.
Okay. I know we've already touched on this, but I think the climate focus coming off COP26 and just in general, to say it's come out of nowhere obviously would not be true. The climate challenge, as it were, has been something that has been of increasing relevance for decades now, but it seems like it really has, the momentum has shifted on it, and it has gone from something of relevance to something that's extremely important to something that is now is critical. With what you've read from the news coming out of COP and what you understand about the climate challenge, and I'll throw this open to everyone, whoever wants to jump in on it first. Do we think that politicians are starting to understand, or they understand, and the same for investors, the importance of uranium and more generally a overall energy mix as we transition to something looking like net zero and then zero emissions? Everyone's nodding, but I don't know who's going to be brave enough to start us.
Go on, I will in that case. I mean, do the politicians understand? No. I mean, taking the cynics' view, I don't think they ever understand. But what I do think they've had, and part of the time lag, I think, they've had a couple of years now to, 2 or 3, how many years it is, to look at all the alternatives they possibly can. And basically, as far as I can see, they haven't come up with anything. Everyone talks about wind and solar, but everyone's now, what they are beginning to understand is the limitations, I think, on wind and solar. And they can do, some of the job, but what is quite clear is they can't do all of the job. Now, we can burn coal in slightly cleaner ways. We can burn natural gas in slightly cleaner ways. We can take some of the carbon dioxide and squeeze it and stick it underground and do whatever we do with. But really, we're not solving the problem because we're still, burning those fossil fuels. We might be burning them better, but we're still burning them. Carbon dioxide still being produced. Even if you take carbon dioxide out of the atmosphere, you've got a problem potentially of the atmosphere thinning because you're replacing oxygen with, instead of carbon dioxide, with nothing. So you're creating problems as well. The point is they haven't really solved that. The point I think they come to is that they realize that they haven't got any wonderful genie out of the bottle solution. They're going to have to put in some work, and they're going to have to sell this. But first of all, they're going to have to come up with a strategic plan, and they're going to have to sell this to voters, and they're going to have to sell it in a way that the voters will consume. And I think the way I look at it, that can't be done unless nuclear takes a central position. Would that be fair? A big part of is a big part of the solution, I think.
Chris, where's uranium sit for you?
Well, I think your nuclear's had a real issue in the past, not just from the political standpoint, but just from a pure cost standpoint. I mean, you can put up a gas plant with hundreds of millions of dollars in a few years, but a nuclear reactor, you're into billions of dollars and many, many more years, and a lot of political and social pressure as well to get these things built. And as such, I think as we see electricity demand increase significantly around the world over the coming years, I would have expected nuclear to kind of hang on to its share, which I think is, I don't know, 2 to 3%, overall. However, we've been hearing about these small nuclear reactors for a dozen years now. And I think that's going to make a big part of the change now. We've just announced actually in Ontario, here last week, they announced the first small nuclear reactor plant that will be built, for the most part in the world. And it'll take the next 5 or 6 years to get that up and running. But I think that's going to be a real game changer in terms of actually being able to implement nuclear into the power mix. Certainly, we have the social need for this move, but I think this will make it actually possible in a much more real way.
Ross, I know you had a view around small modular reactors and at that point, how they'll be introduced. How important is that?
Well, I think it's a game changer. I mean, I would have made, I think I'd almost make the exact same points that Chris just covered. I think that, seeing the small modular reactors is a bit of a game changer, a real paradigm shift, to our sector. They would have the ability to be able to fit into areas that you wouldn't even consider nuclear in the past. And I'm thinking smaller villages, more remote locations, mine sites, for example. They could have the impact that it isn't just a replacement of fossil in a large, for a large population area, but I think to see them where we would never have even expected them before in the past. And, and I think that the cost will continue to go down. So I think that, reducing the price of reactors, and I think this is what you have with small modular reactors. I think of them more of an assembly line, a factory type scenario where you're not designing a reactor specifically engineered for a site, which is what happens now, but a bit more of a more efficient modular type build out. So I think they're more applicable, but I think we're seeing a better sense in the general population of more acceptance of nuclear than even people of my generation. Well, I think of, the younger guys that are the 20s and 30s, I think are much more accepting of nuclear and seeing it as part of the solution as opposed to, even the older generation. So I think there's definitely a sentiment change that's getting more and more prevalent throughout the general population. That's certainly a sense I get when I get out and start talking to people. It's just it's in their thought process a little bit more than it might have been 10 years ago or 15 years ago.
John, are you seeing that kind of sentiment change in the investor community?
Yeah, I would say for sure. I mean, clearly people of all generations are thinking more and more about climate change. It's not a hoax. We're seeing it all the time. Every year in local communities, irrespective of where you live, people are starting to connect the dots that perhaps we are having an impact on climate. So I think people are very focused on climate change and solving the longer term issue. And I think as a result of that, they're being more open-minded about nuclear being part of that mix. I think governments are being, more considerate of the reality of closing down plants, nuclear power plants, and shifting all to renewables entails a number of risks. And you've seen those occur in the last 12 months in a number of different markets around the world. We're seeing the knock-on effects in terms of the price of natural gas and the price of coal, for that matter, around the world this year. So it's not as simple as it sounds. And I'm really intrigued by this whole idea about repurposing coal plants to SMR facilities. Given these facilities are already in existence, the likelihood of people protesting not to have a plant there repurposed to save local jobs. You look at the state of Wyoming and the project that's being funded by Bill Gates. I think is really interesting in terms of a local community trying to transition away from coal and look at this SMR technology as a potential replacement. So, and I will note that the state of Wyoming, which is a coal state, and most of its power comes from coal, they recently made a $50 million investment in the Sprott Physical Uranium Trust. So I think that's a pretty interesting stamp of approval in a coal-driven state making an investment in uranium.
On that note, I think we'll wind things up. Thanks very much, John, Ross, Chris, and Charlie for your time today. Thanks very much for joining us.
Thanks, Chris.
Thank you very much.